So today we are talking about double bottoms, and as you can see on the screen, we are looking at the chart of Bitcoin, more specifically Bitcoin futures. Again, going back to our profile page, you can see the hundreds of articles that have been published. One of the last articles has the title, "The Double Bottom Trap That Traders Might Miss." So here's the article that talks about a specific chart pattern. Again, the double bottom, where we have one leg going down, one leg going up, another leg going down. And from there, if this prior turning point was to act as a strong support, then the expectation would be for the market to move up, potentially break up, and completely reverse the prior trend. So in other words, the double bottoms are technical analysis bullish, keyword is bullish, chart pattern. Okay, now in this analysis, and this is what the article goes over here, which I'm going to explain using real-time charts. The thing is that in the end, the setup that we have in front of us is actually much more bearish than bullish.
If our videos help you stay sharp episode after episode, hit pause, like, subscribe, and keep learning. Your support means a lot to us.
Even though technical analysis used in a traditional manner would suggest that it's a bullish pattern. So I want to get a little deeper into understanding why am I making such a statement that contradicts the school of thought of technical analysis. Nothing against it, but again, there is subtlety in the analysis, and that subtlety is what I want to discuss with you all. So I'm going to use the Ripple function for TradingView. So this will allow me to rewind the chart more or less to the time where the article was published. And we can see here on the daily time frame what I just showed you in the article, which is there was a leg down. I will do this again. There was a leg down, and then a leg up, and then a leg down again. And then from there, again, if this particular support was to act as support, the expectation would be for the market to go higher from here. This is basically what I said earlier. Now, the one thing that may be missed by most traders at the time of the screenshot is that while there is a very relevant turning point here, let me draw a line. While there is a very relevant turning point right there, okay, inside this chart on the right, okay, there is a very relevant turning point that many technical analysts are probably looking at it and they call it support, and therefore the expectation would be for some sort of a reaction around the purple line, and from there the turning point and potentially the trend reversal if we go above the high of the W, which is the double bottom. So while that's the case, the reality is that when we analyze the chart from an order flow point of view, so instead of looking at where the orders were filled, okay, where the orders were filled and therefore price turn, if instead of looking at the filled orders, where the orders got filled, we were to look at where unfilled orders are available, meaning orders that have not been filled yet. So again, we are thinking of the markets in terms of unfilled orders, so we are thinking order flow. We normally call those UFOs, okay, which by the way, they look like flying saucers. So notice how the buy unfilled orders would be located much lower. So this is a buy UFO.
Are you ready to level up your trading skills? Visit and follow our TradingView ideas page. You'll get actionable insights and training materials for free. Scan the QR code or use the link on the screen to keep in sync with the markets.
Okay, whereas there is also a sell UFO above price. Okay, so then the expectation would be that when price comes to the purple line, where unfortunately we don't consider that purple line to be too significant, even though it would be picked up by most trading experts in the world using technical analysis, that line would be picked up as a relevant turning point. And I'm not saying that's not the case. But the problem is that this turning point was an area of price where orders were consumed instead of orders were added. So in other words, because orders were consumed, we expect that when price comes back to the purple line, we will expect a very limited amount of unfilled orders left behind. Therefore, instead of having the turning point potentially creating the double bottom formation, the expectation, as explained in the article, would be for price to have a much easier time going down because there is nothing to stop it really until it gets to 100 plus. And from there, now go ahead and turn and go back higher. That would be the case. If in the end, this purple line had more power than what I expect, and it created a turning point, notice that we have sell unfilled orders above, and therefore the high of the double bottom would likely not be surpassed, because the moment Bitcoin would reach 112,985, we would have plenty of sell unfilled orders being filled, and that selling pressure would potentially bring price down all the way to 100 and then turn. So we don't know if the fall would happen right away, or if we will need some sort of a reversal, temporary reversal for the fall to happen as a reaction to the sell unfilled orders. We don't know what's going to happen, but in any case, in both cases, we are dealing with a bearish formation, not a bullish formation, even though many traders would happily call it a double bottom or a potential double bottom and get in bullish mode instead of being in bearish mode. If we look at what happened, the speed of movement to the downside was very strong. Not a surprise, because again, the purple line represented filled orders instead of unfilled orders. Could some orders have been left behind? Yes, but the probability of many of them to be there waiting would be very low. And as the buy orders were executed, so notice how a new turning point took place. Thanks to those buy orders. Again, that turning point represents filled orders, not unfilled orders, one more time. And by the way, there is no green UFO anymore until we get to 91,000. 91,905. So in other words, we may have a temporary bounce or reaction to the purple line. Notice sell orders being added, buy orders being added afterwards. So of course, the markets are dynamic. But again, this is indeed a bearish setup, and the expectation when that double bottom was forming was bearish instead of bullish, which is the purpose of today's video and lesson, which hopefully you have enjoyed. See you in the next one.
If our videos help you stay sharp episode after episode, hit pause, like, subscribe, and keep learning. Your support means a lot to us.